In today's video, we're going to discuss which of these three Yieldmax plays is the better value here, even after the recent market run-up. So we earn over $150,000 per year in dividends at this channel, and so can you. Email me for my e-guides at akintodd48@gmail.com if you're interested in doing the same. For every $1 you put in your account, you get $4 of purchasing power, okay? I just use a fraction of this to get ahead. The dividends that you see, that's off of using just a small amount of margin purchasing power, and you can see that our performance value shows that the strategy works. We're up 28% for the year, whereas the S&P is up 20%. We were up 50% this year, which I have to say this in every video. We were up 50, but closed-end funds had a rough month during October. Why do I mention that? Because I want to show you the power of margin and dividends. To reach 50% performance gains and 150,000 in dividends is very unusual, but with dividends and margin, you can do this. A lot of people think dividends are boring and they can't see those kinds of returns, but you can. And I'm just showing you that in my performance, okay? If you factor back in the closed-end funds that we had, we were up 50%, right? If you factor back in 15% with Cornerstone, because it's 15% off the highs, plus some of these Yieldmax names that I'm about to mention, then you see how we get back to that 50% level that we were at. But again, we have to get some of these Yieldmax names back to their highs, and that's what this video is about. So the first name we're going to discuss today is Tesla. Tesla, which is the Yieldmax cover call fund on Tesla. It's my largest Yieldmax position, and I'm still down on it. So it begs the question, is this the better value play to add to? First of all, I already have a pretty large position in Tesla. I might get it up to 15K, as I was saying in prior videos, but 12,000, we're down 6% in the cost position. So let's go check out a chart of Tesla, because we need to see if indeed it is a good value. So we're at Tesla, but we have to see Tesla because that's what Tesla tracks. Okay, so we go to a chart of Tesla, and you see that we're off the highs. We were at 400, okay, on Tesla. Now we're at around 243. So we're at 400 for all-time highs, and we're at 300 for yearly highs. So 400 all-time highs, and then on a one-year chart, you'll see that it looks like 300 was the high for the year. Now, this is looking pretty constructive. If you need help understanding charts and moving averages, that's in my Volume 2 e-guide, by the way. We also have Carbon Zero in the chat room, in the Discord chat room, if you need more help understanding charts. But we're above all the moving averages now on Tesla. We're above the 200-day moving average, and all the moving averages are firming up above the 200-day moving average. They're all squeezing in. This is looking like a nice consolidation pattern. So I'm liking this chart, but I never pick directions up or down. I just know the dividends from Tesla, 60%, Tesla, they'll cash flow my position in less than 2 years. So I'm not worried about what Tesla does, but it does look like a good value here. So I'm comfortable holding the large amount that I have in it. Now let's get into the other two Yieldmax names that I want to discuss. But first, let me just share with you that Tesla is 50% maintenance. All right, so when you're buying Tesla, be aware that if you're trying to live the FIRE lifestyle, which is financially independent, retire early out of your brokerage account, it has high maintenance. So snapshot, 50% maintenance. Here we go. You'll see there 50%. So for every $100,000 I put into Tesla, okay, 50,000 of my equity is taken up. This is a huge problem. Now, a lot of people avoid this problem by going to different brokerages. But if you go to a different brokerage, like let's say Interactive Brokers or Robinhood, you might not get Cornerstone. Robinhood doesn't even offer Cornerstone or closed-end funds, but some other brokerages like Interactive Brokers have Cornerstone, but they don't have the special drip for Cornerstone. So when you're playing with Yieldmax stocks, obviously you have to have a total approach, as I always say at my channel. And Cornerstone's a 5-star fund, in case you're asking, why do I put all my money in Cornerstone? Because, look, it beats the indexes. You have to factor back in dividends and drips, and the same will be said about Yieldmax funds someday, all right? But they're still stock specific, okay? They still have high maintenance, so you have to be aware of that. If you need help understanding maintenance, that's in my Volume 3 margin e-guide, okay? Cornerstone, okay, you have to toggle that special drip, and then you have to time it around its rights offerings. When you buy all of my e-guides, you get free access to Discord for life, the Discord chat room, which I don't know of any other YouTube channels that offer this service, but you get my phone number for life and the Discord chat for life. We have a rights offering channel here for Cornerstone where we alert you of the rights offering. We have over 500 members here at the Discord chat who can share their unique experiences with you. Not every brokerage is the same. Not all of them have the special drip for Cornerstone. Some of them have different maintenance rates for Tesla and Yieldmax funds. So you can talk to those members and they'll share with you how they're living the FIRE lifestyle as well. So keep that in mind, that Tesla is 50% maintenance, okay, and it is a stock. So that's why I tie most of my investments to the indexes like Cornerstone and Defiance funds, okay, but just play Cornerstone properly. Defiance funds, we don't know how those are going to work out yet. I'm not going to say play these properly because no one really knows how to play these yet, but Cornerstone's been around for decades, and there is a system to playing Cornerstone, which again is in my Volume 4 e-guide. All right, I could put the bulk of my money in the indexes and sleep at night because they're in indexes. If I put a bulk of my money in Tesla, I'll be pulling my hair out at night. And also that dividend fluctuates for Tesla, whereas the dividend is set for Cornerstone each year. It's 21%. You get a 21% dividend. You get the special drip, and you get days gains potential in Cornerstone. Okay, so Tesla, it looks like a good value. Now, also Tesla is a large part of the indexes. So if we go here to the S&P, you can see that Tesla is 2% of the index. That's why I have so much more in Tesla, and I'm okay with it. All right, now the next value play that I see in the portfolio when we're discussing Yieldmax funds is, without further ado, Netflix, okay? So Netfly, NFLY, where is it in my portfolio? Here it is, Netfly, okay? It's only $1,300. We're down in our cost position, so it makes sense to add about $1,000 of Netflix, and I'm going to show you why. So if we go to the chart of Netfly, which we can't go into because we have to go into the actual Netflix chart, as that's what Netfly covers. When we go to the Netflix chart, you'll see that it's off its highs too, just like Tesla, okay? So look, it was at 700 and now it's at around 500, okay? 453. So it's considerably off its all-time highs. And on a year-to-date basis, it's back to its highs, but it had a nice pullback recently. So I'm liking this pullback. If we could have got a pullback to the 50-day moving average, that would have been even better. But the RSI has pulled back some. It's taken a breather. That's nice to see. And again, we're off the highs on a full year time frame. So to me, there's some value left in Netflix, and I never sell. I never have closed my Netflix accounts. I always keep that on. They have pricing power. They can raise prices on us at any time, and I never seem to cancel. So there it is. There are the highs of Netflix, all right, over 600. And so I think this is a good value. Now, the other reason why I like Netflix is because if we go to the Yieldmax website, you see Netflix has a 55% dividend. So that's nothing to sneeze at, all right? So that'll compensate me for my risk. I'm going to put 1,000 more in Netfly as a result on Monday. It's off the highs, it's below my cost basis, and it has a 50% dividend, but it has 50% maintenance, okay? So I'm not going to put too much in the stocks. I'm going to keep those position sizes managed. I'm going to keep them small and keep my larger position sizes in the indexes, as I alluded to earlier. So the last play that I want to discuss with you, okay, guys, is another value play for Yieldmax funds, and I think we can call this a high-quality stock because it's in the S&P, and that is PayPal, okay? PYPY, okay? If we go to the holdings of the S&P, you'll see, first of all, PYPL is about 15% of the index, 0.17%. So it's a small amount, okay? 0.17, PayPal. And just to go touch on Netflix real fast, NFLX for Netflix, you'll see that is 0.43%. So it's in between Tesla and PayPal. That's why I'm going to have more in Netflix and feel more comfortable with it. But PayPal, look, it's a small part of the indexes, but it's high quality. I use PayPal every day. People all around the world use PayPal. I mean, it's a global brand. And so we have to go to the chart of PayPal. Okay, so here we are, PYPY. We must go look at PYPL because that is what the Yieldmax fund covers is PayPal. Okay, so look, we're up against the 100-day moving average, the purple line. Okay, and then the 200-day, the black line looms as resistance. It looms ahead. Here, the 200-day moving average, it failed. So that looks like it could happen again. But this time, I think it could be different. Why? Because there's a Bitcoin mania going on. So you're going to get some Bitcoin pin action through PayPal because they have blockchain assets. And also the moving averages are getting closer together. Here they're further apart. You can see they're fanning out, they're waterfalling out, and so they're all further apart. But here they're consolidating, they're coming close together. This is a constructive sign. Once we pass the 100, the purple, then we can look at 200 as the next resistance. But I think that you could even look to see new highs, a break of that 200, because we got there and failed here. But look on a 5-year chart, you'll just see how cheap we are. We're so, even in 2019, we're below those highs, and that was around 100 a share. So I'm sorry if I'm moving fast. I'm on my phone. Okay. Well, look, PayPal was at 300, so it's the ultimate value play. Do you think anything's wrong with PayPal? I mean, maybe they're having some trouble here because interest rates are rising, but now the interest rates are falling. This should be more. This should accommodate growth stocks more. So plus, again, you have Bitcoin mania happening. So those could be the two tailwinds or catalysts that push PayPal above its moving averages. Okay, so it has a lot of room to go before it hits old highs. It's a deep value play. So I'll be adding 500 to PayPal on Monday. Okay, I'm going to add 1,000 to Netflix, 1,000 to Netflix, 500 to PayPal. And I'm going to leave Tesla alone because it is a good value, but I'm still pretty overweight in it, and I'm waiting for more dips in that to add more. You always have to stay disciplined. Okay, but I'm remember 50% maintenance is the case for PayPal, so I'm not going to be putting too much in that, and it's a stock. I don't want stock risk. My available for withdrawal must stay high. Okay, when you want to live the FIRE lifestyle, not only do my dividends, okay, of 150,000 pay back this margin debt of 150,000 roughly in 1 year, okay? But you want to keep your available withdrawal high. I don't care if I leave some margin debt on at all times because that's always the plan because my interest is so low. I negotiated my margin rates down twice, and many of my clients who bought my e-guides have done the same. When you buy my e-guides, you get my phone number, so you can call me anytime and I'll walk you through whatever you need help with, whether you need help negotiating your margin rates down or understanding maintenance in your account to get more performance out of your account. You can call me anytime. Okay, my phone number is free. Now, this margin debt, when it gets paid down, my account will grow by the equivalent amount. It's different than credit cards. Credit cards, when you pay them down, your account goes to zero. When you pay down your margin debt, your account grows by the equivalent amount. So 474, add in another 100,000 in dividends. That's 574 because I have about 50,000 of bills every year. So my account will grow by 100,000 by the end of the year. My debt will be at 50,000. Okay. Because I'll knock down 100,000 in debt. My debt will be at 50. I'm always going to add another 50 of debt, always keeping it around 100 because it pays me to stay in margin debt. The interest that I'm charged on my margin interest is way less than the dividends that I'm receiving on these Yieldmax funds. Okay, this margin doesn't show up on a credit check. You can click sell at any time, and this is how you qualify to banks for loans to live the FIRE lifestyle. You need dividends for loans, not trading gains. Okay, these dividends also pay my bills. Even in a down market, they pay my bills, and everything is automated out of my E-Trade checking account. I can swipe my E-Trade credit card, go wherever I want in this world. Okay, I can use margin to buy anything. I don't have to buy investments. Okay, you can buy anything outside of your account. It's cheaper than credit cards on the rate that I have for my credit cards, but you have to keep this available for withdrawal number high. I always like to say I can withstand a 30% correction in a month's time frame because people ask, what will you do if we crash overnight? Well, I can withstand that because I have a high available for withdrawal. When this gets to zero, you're in a margin call. So I can withstand over 30% corrections and withdraw freely out of my account. Of course, over a year, my dividends will pay back all my margins, so my leverage goes away. Okay, so I'll never get into a margin call over the course of a year. I'm not worried about the leverage there because my dividends pay that back. Once again, you just have to be able to withstand market crashes, and the key to this high available withdrawal is low maintenance and tying your investments to the indexes. Yieldmax stocks have indexed aspects to them because they're large parts of the indexes, but they're still stocks. You want to tie everything to the indexes when possible. That's why I use Cornerstone. But again, play that fund properly. So anyone can do this. Anyone can live the FIRE lifestyle, okay? Everyone's granted this purchasing power in their brokerage account, okay? It's up to you to use it safely and scale responsibly, okay? And if you need help doing that, email me for my e-guides at akintodd48@gmail.com. Again, when you buy my e-guides, you get free access to my phone number and the Discord chat room for life where we alert you of the Cornerstone rights offering, and we have many other channels there for you to check out at your leisure. Okay, so if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.